Well, we've had a relatively quiet day, in part because the US bond market is closed for Veterans Day. The Japanese stock market is a new post-crisis high, thanks to speculation about a snap election there, while Brent crude has fallen to yet another new low for the year. For now, I'd like to concentrate on one factor which I find rather worrying about the US market, given that it's at all-time highs. If we take a look at how large caps are performing compared to small caps, it's very strange indeed, given that if we are in a period of expansion, if we are in a period of a bull market, normally that is when small caps would be outperforming. Plainly not the case. Similarly, if we take a look at how a cyclical sector, such as consumer discretionary, is doing compared to a very defensive sector such as utilities, which as far as investors are concerned does little more than pay out dividends, similarly all the wrong things are happening for this supposed point in the cycle. Defensives are beating cyclicals. How can a bull explain this? Well, I put this question to Richard Bernstein as part of the interview we brought you yesterday.
What that reflects a little bit is the contours of the profit cycle. Generally, when profit cycles decelerate, you'll find defensives and larger caps tend to outperform. Profit cycle accelerates, you find smaller caps and more cyclicals outperform. And what you actually saw through a good chunk of this year was the profit cycle, although not imploding by any means, that growth rate was getting lower and lower. And what we saw was large cap outperformance and defensive outperformance. What's very interesting now is it almost looks in the data as though the profit cycle is beginning to trough. Not that we're going to have a boom in corporate profits, certainly not, but we didn't have a cascading of corporate profits before either. If we're right, and if that gradual increase in corporate profits takes hold, it would make sense for small caps to come back to life. It would make sense for cyclicals to come back to life. But I think what was reflected in the first half of the year really made pretty good sense, given the fact that corporate profits growth, although not negative, was slowing.
So again, you can see that much of the bull's case rests on whether corporate USA really can revitalize its profitability once more. I'm not sure that the third quarter earnings season really proved that case. That suggests that the fourth quarter earnings season could be a very important moment of truth. But the good news for those of you who want to go with the flow is that that is still 3 months away.